Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 30th of December 2018, and we're providing our gold and silver weekly update for the week ending the 28th of December. Gold rose $25 last week from $1,255 to $1,280, having hit a high of $1,281, though the futures market did see it hit $1,284 and a low of $1,255. In sterling terms, gold finished the week at £1,008, that's up £14, and in euros it closed at €1,119, that's up €15 on the week. Silver rose 77 cents from $14.62 to $15.39, having hit a high of $15.39 and a low of $14.62. In sterling terms, it closed at £12 and 12 pence. That's up 55 pence. And in euros, it closed at 13.45 euros. That's up 0.59 euros. The gold to silver ratio fell more than 2 points, from 85.8 to 1 to 83.2 to 1. The Dow Jones closed on Friday at 23,062, down 76 points on the day, but up 617 points on the week. And the NASDAQ closed at 6,584, up 5 points on the day and up 251 points on the week. And the S&P 500 closed at 2,485, down 3 points on the day, but up 69 points on the week. Brent crude fell 61 cents, from $53.82 to $53.21. And US light crude fell 26 cents, from $45.59 to $45.33. The dollar index stands at 96.40. That's down 0.55 on the week. 2 weeks ago, we stated that gold and silver had been operating within a relatively tight range of $100 for gold and $1 for silver for a number of months, and that the following week we expected them to move outside of that range. Well, as far as silver was concerned, we were out by just 1 week, and gold at 1,280 is bordering that level, though not quite there yet. We also pointed out that depending upon which side of that range it moved out of, then that would dictate the price movements into the early part of the new year. Well, on the morning of the 27th of December, we published a video for our Inner Sanctum members when silver hit $15.03, stating that we now expected silver to broach $15.20 and not to be too surprised if it spiked up to $15.50, which is where we saw some significant resistance. Our analysis was very confident about $15.20, but less so about the $15.50 level. Well, it did indeed go relatively quickly past $15.20 and settled at its high of $15.39. We were less confident about gold hitting 1,300, but did point out that it was a possibility, and that level would be tested. But we were a little concerned that with all of the factors which we listed in that video, which should push gold higher, it was both disappointing for gold bugs and collectors to see the movement relatively modest. Having said that, we must point out that last Friday saw gold at its highest level since June the 26th. And some analysts state that the reason for this was the fall in US Treasury yields, which made the US dollar less desirable as an investment, and that the Fed was likely not to be so hawkish in 2019, thereby allowing the dollar to fall further. Chartists or technical traders are now stating that Monday will indeed prove quite decisive, in that should gold break the 1285 barrier, then its price action will be carried towards 1312. If it bypasses the only nominal resistance level of 1303. And should it fall below current levels, then 1260 is the next point of support, and then 1236, though some will argue that the 20-day moving average at 1245 is more representative. So we potentially could have a short-term trading range of 1236 to 1284. For those who like to get into the weeds of technical trading, the fast stochastic reading is 87, which is above the overbought trigger level of 80, which could possibly suggest a correction. Now we have to point out to subscribers that we're talking here about the relative weakness of the US dollar having an effect on gold prices. Those in the UK who have seen sterling fall quite severely due to the possibility of a hard Brexit occurring have already seen gold rise more than £105 in the last 2 months, which is the equivalent to $133 an ounce, compared with an actual dollar increase of $85, which is why again on the 4th of December, when gold stood at £967 and silver at $11.40, we produced a video entitled "Gold and Silver Prices May Continue to Rise in Sterling Terms," even though it had already achieved half of its current gains since October. Now, we do not say this to show we're always right, as we aren't, but generally we're not far off, and when we are wrong, percentage-wise, it's a few percent, and not the thousands of dollars discrepancies some so-called gurus have previously forecast. There are, however, 2 key points to mention about last week which should not be forgotten. The first is that as many traders were on holiday, we can expect extreme price movements with relatively little action in most of these markets. So last week, though indicating a trend, we don't argue, will be less important than this coming week when traders resume work. In addition, and this is positive for gold and silver prices, consumer confidence figures out on Thursday showed a fall in December to 128.1 compared with 136.4 in November, and was the lowest level since July. How often have we said that whether you're talking about the dollar, gold, silver, or other commodities or indices, confidence is an important aspect to take into account. The confidence of consumers, of investors, and of traders. The silver market and price action is even more interesting than gold. It has, without question, tended to follow gold's action in recent years to a large extent, often lagging behind. Last week it led the charge, or certainly in percentage price action. Now, of course, the relative dollar weakness had an effect. And of course, as already mentioned, the fact that the Fed will be less likely to raise interest rates as often as originally predicted for 2019 will also underpin prices. The current consensus for the moment is that silver could attempt to venture towards $16 and possibly peak at or around $17 eventually, providing it does not break down back to the $14 level, which, if it does, then $13 will be on the cards. That said, there are so many negative factors, or shall we say uncertain factors upon us and on the horizon. Investors moving to a safety play such as gold and silver should not be surprising short term. We have the government shutdown, which could in theory go on for weeks. We have volatile equity markets. We have a new Democratic House of Representatives, much of whose time will be spent on Trump and Trump family business investigations. We have the issue of China and North Korea perhaps not playing ball, as well as issues with Syria and possibly Afghanistan. Not to mention the concern over world trade. In addition, like stocks, January does have a tendency to be a beneficial month for investment vehicles, as often in December investors sell to crystallize their gains, and those who receive their bonuses in December use January as an opportunity to invest those bonuses. Though we're not quite sure as to how many traders have received bonuses in 2018. So we should begin to see gold and silver prices rise further into the new year for both defensive reasons and traditional beginning of year investment reasons. The question on everyone's lips, of course, is by how much and for how long? And if gold does rise in January, will it continue into the Chinese New Year in February, which traditionally is a time again for the purchase of physical gold and silver? So next week, let's see what data traders will be assessing. On Wednesday, we have market manufacturing PMI for December. On Thursday, ISM manufacturing index and motor vehicle sales for December. And very importantly, on Friday, non-farm payrolls for December, including unemployment rates and average hourly earnings, plus the market services PMI. If this data is weaker than expected, then we can certainly anticipate a weakening in the US dollar and higher gold and silver prices. If stronger, then the situation may reverse. However, unless something spectacularly positive happens early next week, then rising prices should not be a surprise. However, we must also be mindful that with the government shutdown, it is far from certain that this data will even be published on time, which will leave traders a little directionless on these issues. So in conclusion, we are looking to next week to provide the trend for the early new year with a full complement of traders. But we caution those who perhaps are involved in day trading to expect wide gyrations, especially in the equity markets, and also to bear in mind that once some of these economic and political conflicts are resolved, then gold and silver pullbacks can be expected, but perhaps not quite right now. Meanwhile, we wish each and every one of you a happy and prosperous 2019. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.